Alrighty, traders. This is Blake Morrow. You are listening to the Face webinar. Hold on one second. Dragging everything over. Okay. All right. So make sure you guys can see that. How you guys doing this morning? Seeing a little bit of a pullback in the dollar, and we're seeing actually the Kiwis a little weaker here. And I just want to point out a couple of things. Is the Aussie New Zealand? I actually tried to short this yesterday. I took a quick loss in it. Where am I? Oh, here we go. We're at the 618. I tried to sell it as we approached the 618. We got above it, and I took like a 17 pip loss, but which it wasn't a big thing to me. I knew it was really pivotal. I should have just turned around and went long. I was more concerned actually because the bigger position I have going right now is the short Kiwi being long, the pound, and being long the euro against the New Zealand dollar. Those are my bigger positions right now. And you can see both of them are probing some pretty big resistance levels. And I think those are going to be important for you guys to be watching, especially if we start to see stocks come down. And so I just wanted to mention that really what's important to me, and I sent this out via on your ForexAnalytix platform, but I just want to make sure that you guys see it here. Here is. So, I posted you notice I put the NASDAQ chart up there. And it says, the chart is the NASDAQ 100. I actually made it a completely separate chart, and then also the S&P, and those levels are going to be really important to watch. And the NASDAQ's pretty close to that support. And so I'm thinking that the NASDAQ might be what drags down the rest of the stock market. And when I say the rest of the stock market, I should say it just puts a little bit of a dent in risk appetite. So if NASDAQ comes down, maybe it drags down the S&Ps, and we come through this support. So speaking of which, let's go ahead and get this on the bias chart while we're here. So as you guys know, it's hard to be bearish while we're above 38.70, but we are seeing some signs that things might turn. And, when you see the dollar doing what it's doing, the Aussie's pretty weak, the Kiwi's weak, the Canadian currency's weak, crude looks like it could roll over, the commodity complex is weak. We have yields ripping today. A lot of things like that are happening. I'm wondering if this is telling us that stocks might actually have a bad day. And I pointed it out to you guys yesterday. Fridays, it seems like every Friday the market comes under pressure. You know what I mean? It really feels that way. So, today we'll, focus on, I guess resistance is going to be the 127% extension, even though we've been above it, is going to be 39.25. And we are bullish. It pains me to do that when I see everything moving the way it's moving this morning, but we all know that stocks are, and they continue to be bullish. So it's, I know it's like, oh God, are things ever going to change? I told everybody in the chat room yesterday, or the day before, and we were having a conversation with Stelios, and look, we are going to get to a point, and there will be a time where we're going to go, oh my God, the market is bearish every day. I wish it would just bounce. There will be that day. I hope it starts today, but based on way I'm positioned. But I'm just saying it will shift, believe it or not. I know it's hard to believe. All right, let's go over to currency. So the euro dollar is trading a little heavier. We're trading at the 120.80 support, which I mentioned in the chat room, or did I mention it in the analysis this morning? When I did an update, euro dollar Retracement comes in at 120.60 level, and previous support and resistance is at 120.80. So a couple strong supports for today. Yeah, that's one. We're on it. The next one, which is the real critical one, is going to be right here. That's the 38% retracement. And also you can see this trend line support. So that's going to come in at 120. I'm going to write down 120, 50, 60. I got to write down both because I think they're both pretty important for today. Resistance is obviously 121.50. And we are in a range. Cable. And by the way, Dominic was in our chat room, and I don't know if he's listening in right now. Dominic was like, am I the only one that's not, short the dollar right now? I'm like, I'm short, or excuse me, not long the dollar, because he was short the dollar. And I said, look, I'm not long the dollar against everything. There are certain currencies I just won't do that with. Like I don't want to short the euro. I'll play the euro long, but I'm not going to short it. And the cable's same. We're coming into pretty key support here. 137.55. That doesn't, and you can see what the pound's doing against like the Kiwi right now. So yeah, I mean, I don't want to do that. If I'm gonna buy dollars, I'm gonna do it against something else, not against the cable. That doesn't mean that it can't go down. It's just I'd rather play the sterling long against other things, right? Resistance. I mean, this could theoretically be bull flagging here. Right? So I would say resistance, like this little previous support, should act as current resistance somewhere around 138.20. Because if we get above that, oops. And I think the cable is bullish. Aussie struggling with yesterday's resistance. So that is key now. 77.70, and you guys remember 77 cents is support, right? We're getting really close to it. So same analysis as yesterday. And I think this is pretty important support. Equally, I think this is important resistance. I think if we break above 77.70, it instantly turns bullish. Okay. It's not right now, but I think if it breaks that resistance, that would confirm to me we're going a lot higher. But we get below 77 cents, and then next thing you know, we're back into this range. Okay, and then we're gonna have to adjust our channel, be looking like that, something like that. I don't know. But that's what we're dealing with that. Kiwi's heavy. Big failure up here, right? And then we broke through 72 cents today, and now it's just been like, what happens if we break through 71.65? I mean, that's only 10 pips away. I'm gonna write down 71.30 today. 71.35, and then obviously 71 cents. Oops, shoot, I didn't mean to do that. Okay. Resistance is yesterday's resistance, 72.50. Right. Okay. Dollar Canadian. Big move off of yesterday's support. So now it dips down to 127.10. Jack was talking today earlier. He's like, man, I want to add to add or get long. He was in the chat room. Add or get long to the dollar Canadian, and I was like, man, I don't know. I thought he'd be able to get another dip back to 127 because stocks are so bullish, but man, this dollar Canadian's weak, and I think a lot of it has to do with crude being so strong. So, just keep that in mind. I mean, on my longs, I've moved up the pattern and play stops because we should not see below 126.50 anymore. We could dip to 127.10, and I think if we do, that's where you want to be on the long side. If we can get down there, like this, right? But resistance is going to be 128. It's still range bound. Kiwi, what a bounce. Looks just like the dollar index, by the way. And one thing that, bums me out about all this is, I was long and I had a nice trade going, and, it slumped a little further than I thought. But now support is at 89.10. And resistance is any move back up towards 89.80 now. And that was a big deal before. So, okay. We are in a range. Dollar yen, or let's go dollar Norway. Obviously, I've talked a lot about this, but let's do this since we've seen that. Let's remove that and let's do these high to low. 50%, 618. Did I just have that up like that? I'm going to write down 856 as being important resistance, because these are all trend lines. These are all trend lines that come in, and depending on how you draw it, this trend line could be like this. It could be through here because you got to match it up to this other high back here. So we can. A lot of people are going to be drawing this differently. So the reason why I'm going to just leave it like that is because I'm actually going to focus more on this trend line and then the 618, which really comes in at 856. That's going to be pretty key. If we get above 856, in my opinion, it's bullish. Okay, we are range bound for right now, and we shouldn't see back below 840 anymore. Actually, I think today we might be able to get back down towards 845, maybe. Okay. All right. Stocks open in 2 minutes, guys. US dollar, Swedish krona. By the way, I am long some US dollar, Swedish krona, just so you guys know. I tweeted about it the other day, but I'm long some. Dollar Mex. So the dollar Mexican peso, was this enough to really just stop out longs? Or, and it could have been. Move below this trend line, maybe below that low. The dollar Mexican peso is very similar to the US dollar Norwegian krona. You'll notice the similarities between the charts. They're acting exactly the same. So I'm going to be concerned with right up into this resistance here, roughly about 2025. But intraday, I think resistance at 2015 is going to be good. So 2015, 2025, I'm just writing those down. Support, 1997 here. I mean, this is 1991, but I think anybody who, missed the dip down to 1997 is probably going to want it. So okay. By the way, if you're not in the chat room, I'll just let you guys know that I am long a little bit of USD South African Rand. If you missed that from yesterday, I think I talked about it a couple of times. I got long yesterday at 1463 basically. So I'm long a little bit. I'll get a little bit more bullish. I'm looking for a move back up to this trend line here. This is what I'm looking for. Yeah, I don't know if we'll get it necessarily, but Alexander said I wrote the US. Oh, I did. Holy cow, I did. Thank you. Totally messed that up. Thanks, Alexander. Appreciate it. I would have figured it out sooner or later. I would have started typing saying, hey, wait, that's not right. So thank you. What were we just discussing? Right along. Dollar yen. Okay, so dollar yen, same as yesterday, 105.25. Dips down. Well, this is 104.25, way down here. This, a retest here. I don't think we're going back down there today. I think we'd be really lucky if we slumped to 104.50, right? 104.55, 104.50. I think it would be pretty lucky to get back down there again today. So 105.25 and 104.50. While we're below this blue line, I don't want to flip it to bullish. Okay. Stocks are getting a boost. The Dow is. NASDAQ's coming off right at the get-go here. But remember, it's all these opening orders coming through. Don't get too terribly excited about the market just yet. Okay. Dollar index. Here's the dollar index. So we were talking yesterday how that might have been a false breakdown. It was, and it played out. Let's assume resistance is going to be about up to here, which should coincide with the 618 retracement, I bet. Pretty damn close. Actually, it's the 50% retracement. So 90, I'm going to say 91 is good resistance because you can see 91 comes in right here. All right, that's roughly 91. And there's your 50% retracement. Here's your 618. Here's your previous support. So I would say 91 is going to be pretty good resistance today. Good enough to write down. Let's just put it that way. Anybody who is, anybody who is short dollars, they're going to probably look for dips back to 90.50 as being well supported.
I'm still short the dollar against the NOK only.
I'm sorry, what'd you say?
I'm still short the dollar against the NOK, but I'm like more than 15% in the money. So,
okay. Why were you saying that?
You said anybody that's short the dollar, and I just reiterated that I'm still short the dollar, but only against the NOK.
I'm sorry, I should have said dollar index because we were covering
not massively.
Huh?
Yeah, I just realized because I was looking at the other screen, I was doing charting, and then I saw that you're doing the DXY. I was just listening to you. You know what I mean?
Oh, got it. Okay, all right. I was like, man, I'm not even talking about Norway right now.
Yeah, but I was just listening. Anybody that's short the dollar, I didn't see you doing the DXY.
Right. I got it. I was like, man, okay. Sounds good. All right. So here's, let me just finish off with gold, Steve, and then I'm going to pass it to you. So here's gold. Gold, by the way, completed its head and shoulder pattern. If you guys missed this yesterday, here, here you go. So there's gold hourly head and shoulder pattern, right? Should play back to the 18. It was actually 1810 level we were looking for, because if you actually do this measurement right from here, that's the head. I'm not going to draw the shoulders out and everything else because I'm just going to delete these here in a second. It should have taken us to 1810. Well, or roughly 1810, 1812, somewhere in that neighborhood. We spiked down to 1810 and then bounced. So I'm not saying that it can't go any lower. I'm just saying it completed the head and shoulder pattern. You know what I'm saying? Whoops, I didn't mean to do that. I just deleted it. I hit it. I didn't mean to do that. All right, so support today. See all these spike lows down here? I wouldn't be surprised if we revisited them at 1808, but I'm not going to write it down. I'm just, gold's been trading heavy as it is. So NASDAQ is a little heavier here. 1800 should offer support. That's a 78% retracement. So I'm going to write that down for now. And now resistance, if anybody's trying to, if anybody's bullish, they're probably going to want out of their gold on any move up to 1830 because, the neckline's at 1835 and this high right here is 1827. So I'm going to say any move back up above 1830, if anybody's long, they're going to want out. I'll write 1835 for now, and I do think we're in a range. So your bias chart is now finished. Happy Friday, Steve. How are you doing?
Good, mate. How have you been?
Fridays are usually tough. So sorry, guys. I'm usually tired by the time Friday.
Yeah, makes sense. I mean, after a whole week,
it's just
running out of fuel.
Yeah, it's just getting up super early, and so my eyes are like my eyes can't stop watering. It's like I'm watching a romantic.
Yeah, they dry out. Yeah, I know exactly.
Yeah, they're just continuously watering.
Yeah, they dry out, and that's why you have tears. So I mean, it's normal. You just need to make it up during the weekend with a little bit more rest and.
Yeah. So anyway, that's what I'm trying to do at this moment is wipe all these out from my eyes. But anyway, I just wanted to say, have a good Friday, everybody. We don't have the daily roundup here. Just
on Fridays, yeah.
Yeah, on Fridays, just so you guys know. TGIF. I'm going to see you guys in the chat room. I just really think we need to be watching the NASDAQ today because the NASDAQ is trading a little heavier than the other markets. Dollar Mexican peso is pretty well bid. Just I think we have to be pretty careful. If NASDAQ starts breaking lower, then and you just keep an eye on not only NASDAQ, but watch Bitcoin, Ethereum. Look, G7 meetings this weekend, Steve.
I would actually cover Bitcoin and Ethereum. They start looking to me like this
Wait,
last.
Hold on. I'm going to let you cover them. I just want to say that if you're long cryptocurrency and you got the G7 finance ministers meeting this weekend, Janet Yellen's going to be there, and everybody's talking about cryptocurrency right now. You've got my 13-year-old kid wanting to buy cryptocurrency. Everybody's talking about cryptocurrency. And does this threaten the financial stability of central banks? If they start really talking about cryptocurrency this weekend, I mean, you got to be careful. If I was long cryptocurrencies, which I'm not, if I was, I would have hard stops in place. And that's all I have to say about that.
Yeah, and the good thing at least is that they trade 24/7. So at least,
right.
You don't have, the gap down on Monday morning type of risk, but on the other hand, their volatility is so great and, it's a thin market. So even though they trade 24/7, you might get price action equivalent of gap.
Yeah. And so but yeah, let's imagine over the weekend we get, and I'm just using this as an example. Let's say Bitcoin, there's some talk from the G7. They took kind of a hard stance and verbally, you don't know what they're going to do, but they're definitely aware and they're concerned about the rise in cryptocurrencies. You're threatening the euro, the dollar, the yen, right? So
Also, on a
if there's some
political,
harsh stuff, well, how about if Bitcoin opens, I mean, trades over the weekend below 40,000? Where's the dollar going to open up then?
also on a political note, Blake, the cryptocurrency fan base, a big part of it, self-identifies more closer to what we would call a libertarian. Okay, so it was less of a risk under Donald Trump, who played the card that he's more of a conservative, free market guy. He wasn't. I mean, in my opinion, we saw in action, he wasn't. Government became even bigger under him. Yes, he stayed away from putting in more regulation, but on the other hand, he didn't deregulate. But anyhow, this is a different story. Now, what I'm trying to say is that, in the contrary, the Democratic Party, I think, doesn't have a big fan base among the cryptocurrency people, meaning I think the risk of, even from a political perspective, of more regulation or clampdown under a democratic presidency, I think it's much higher.
Well, we're definitely going to be seeing that. So, hey, Steve, I'm going to get hopping. I'm going to let you talk about things that you want to talk about. Is Stelios even here?
I'm here. Yeah.
Yeah,
right.
he is.
All right, guys. Well, hey, everybody have a great weekend. I'm gonna get to it. So I'll see you guys in the chat room, or I'll see you guys on the flip side.
Blake, having
Blake.
to do with cryptocurrencies, if you look both at Bitcoin and Ethereum that I'm sharing now, I think that both of them, after this parabolic move, might be forming some kind of an ascending wedge. So I agree with you. I think people should be careful here.
All right. Well, there you go. You got to
and look at the momentum divergence here. It's massive, massive.
Yeah.
Yep, it sure is. But yeah, I'm we have a hard time struggling with divergences when you've seen equities go straight up for the last.
Yeah, undoubtedly.
Anyway, yeah. We'll see. Sentiment just needs to change, and right now it's not. So, anyway,
Yeah.
all right, guys, have a great one. Have a great
You
weekend.
too, mate.
All right,
Bye-bye.
Bye-bye.
One more thing I want to add, Steve, on the G7 meeting is governments need to they have a balancing act, because what they really want is they want to go fully to digital currencies, but they want to go onto their own digital currencies. So they're gonna say things against Bitcoin and Ethereum and all that, but they don't want to say something against digital currency. So it's like, oh yeah, it will be great to have a digital currency and all that, but just not this one,
and Stelio, the fun part, as you know better than most people, in a bull market, the market interprets almost everything as good news, or it tries to give to almost everything a positive spin. So, for example, I remember in the past, whenever we had conversations about digital marketing, digital currencies from central banks, the cryptocurrency market took that as a positive, like as a nod, as an acknowledgement that this is the way forward.
Yes. Yeah.
If these people thought about it properly and they were just not blindly trying to interpret everything as positive, they would realize that, central banks creating their own digital currencies is a method for them to control even more, not of course money laundering, because that's almost always an excuse, tax evasion, so on and so forth.
And they want to know every transaction that happens.
Exactly. So do they really believe that creating a digital currency, central banks creating their own digital currency, is positive Bitcoin or Ethereum? Do they really believe that central banks will let the two of them, let's say two of them, markets, let's say the legitimate and the crypto market, let's say, compete with each other? That's exactly what they want to do. I don't think so. So, it's one of those news pieces that always gets spinned positively, but I think once it happens, it's going to be very negative for cryptocurrencies.
Yeah. Anyway, it's been a runaway train so far, so it's very difficult to get in front of this. And I'm not saying
from a trend perspective, it's and I mean, it looks now a little bit fatigued. But other than that, yeah, I mean, it's a raging bull market, right? I mean, undoubtedly.
Absolutely.
As the S&P from the 20th of March is a, raging bull market, right?
Well, if you go on a monthly and go 2009, it's incredible. I mean,
Yeah,
incredible.
It's unbelievable.
And this blip in March
Yeah.
is just a blip if you look at the big picture. It's
Yeah.
really just like, okay, you can see it, but it's just a correction. Anyway, it's
having to do with duration. It was definitely a blip.
Yeah.
Not with size, but duration. I mean, yeah, it was nothing in comparison to the 12 years of the raging bull market. It's a little bit interesting if you notice. On the S&P, since that's like the barometer for risk, I mean, the most common index to use, we've had like so far 4 consecutive pin bars. Of course, today is early in the day, so who knows. And so far, the past 2 days have been inside days. So today, so far, an inside day to an inside day. So definitely some consolidation here, but the fact that we're not really breaking down, once again, puts the burden in the side of the bears to actually prove that they can do something about it. Because, these type of horizontal consolidations in a bull market, they tend to get resolved to the upside, and the opposite in a bear market, they can tend to get resolved to the downside. So, looking at this price action, I think it's likely that we're going to see, more upside. And not coincidentally, obviously, the same thing applies to crude oil so far. I mean, crude oil seems to have stalled during the past like 3.5 days, but this might as well be another little bull flag here. So we might need to see, more strength from crude before we get a deeper correction lower. And let me switch to copper if and when it decides to do so. Yeah. And copper, tried to sell off earlier today, already pared back most of its losses. So, I mean, I'm not seeing the signs yet that we should be fading this market. As I've said before, I really think that chasing this market is going to be completely irresponsible. But fading it, I think it's, so far equally irresponsible, right? Some other things are still diverging, and they might keep diverging until we actually see a correction lower. Here's the USD CAD diverging both with crude and the S&P, for example. Here is the USD NOK diverging. Here is the VIX diverging. I remind you that the relationship, for example, between USD CAD and VIX, especially in the past, was very, very, very well known. So the VIX, the USD CAD had an amazing correlation with the VIX. Not so much anymore as in the past, but for the time being, they seem to, in essence, confirm each other. So, I think that these divergences will end up playing out. But can you say if it's going to be in 3 days, in 5 days, or in 3 weeks from now? No, you can't. So, I still maintain my initial opinion, which is that you shouldn't be chasing these trends because they're very, very, very fatigued, and we will get a deep correction or a sharp anyhow correction that will produce a buying opportunity. But I don't think you should be waking up every day thinking that might be the exact day. Now, having to do with metals, gold remains heavier than silver or platinum. As we said before, during first part of phase, yeah, I think it can produce a lower low within this, in my opinion, clearly corrective move. Silver remains better bid, but what shines even more among them is platinum. I think now, as long as platinum trades above like 1170, you should just keep looking higher, with 1336 sorry, being the next upside target. Anyhow, this is more or less what I had to say. So let me check if you have any questions.
Just
Platinum, I've covered
Platinum,
that.
and you said that, yeah.
USDMXN, Blake covered that. Palladium, nothing has changed with Palladium. Absolutely nothing. I think this is a long-term consolidation. Most likely we'll end up getting resolved to the upside, but when? Who knows? It might take a long more time because this was a massive move higher and it might produce a very long-term consolidation. Exactly. If you're looking for some kind of a fractal to this, in my opinion, the best thing to it, and I've said it a long time ago, and I've been confirmed so far, is USD yen. In my opinion, the platinum market looks eerily similar to the long-term picture of USD yen, that massive uptrend, and then a long period of time to consolidate that massive move higher. So, I think the platinum market might be following more or less the same type of example. So I wouldn't rule out that we need to remain patient for a much longer, likely, before we see a legitimate breakout. Anybody else? Any other questions, or do we call it a day and a week? Going once, going twice. Okay,
it's
so
been a long week for everybody. So
yeah, so I wish everybody a wonderful weekend, and we'll be back on Monday. Enjoy, relax, charge up your batteries, and let's hope next week is going to bring, some interesting price action for us to trade. Bye bye.
Thank you guys.
Bye, Stel.
Bye.